Buying property in a foreign country is an opportunity and also a risk. And a lot of people are investing in Portugal mainly for the golden visa or because they're going to move there on a D7, a D2, NHR, what have you. But Portugal has its ups and downs in terms of real estate investing. And I'm going to tell you about my personal experience of renting and investing and selling in Portugal. Hi, this is Jeremy from The Millionaire Migrant. I left the UK in my 20s. I moved overseas. I've lived in multiple countries, have multiple residencies, I have multiple passports, but I have been running a citizenship and residency business for 15 years, which has helped more than 10,000 high net worth people obtain the second nationality as well as residencies. I am also someone who has invested in real estate in over 10 different countries across many, many years, almost 2 decades. So I'm not known for this, but this is something I'm willing to share with you, my experiences of investing largely very profitably across multiple countries and understanding the different nuances between each one. Now, everyone is aware about the popularity of Portugal. It's very, very popular with the Americans right now. If you look at the data coming out from the immigration body, which is the AIMA, it used to be called CEF, Americans have been top nationality demographic for the last 3 years. Millions of people around the world have been very interested about it. And if you look at the data, it's thousands of people who've been doing it every single year. It's extremely popular. It's a fantastic country. I talk about it many times and I will continue to talk about it. I'm a Portuguese resident and it served the real purpose of why you should have residency programs. I keep coming back to it again and again, but countries compete for talent and capital. And the fact is like, if you don't like it where you are, there's many countries, including Portugal, who would love to have you to come invest. Extremely welcoming people, very humble people, very hospitality driven people, and just I don't have, I don't want to say I have nothing negative to say. I do have some negative things, but I also understand that no country is a paradise. But ultimately, it's been extremely popular and a lot of people have been investing there, but they also share online a lot of their frustrations and adaptation problems. And there's still a few things that really grate me about a few things. I won't mention any names, but Vodafone, you're one of them. But otherwise, it's been a great experience. Now, this video, we're going to talk about the property investing aspect because I see a lot of stuff online where people are talking about buying property, living in property, renting property, and even some of the Airbnb plays that you can do there through arbitrage or through just outright purchase, and the problems that they're facing because the laws are changing regarding Airbnb, not just in Portugal, but as you notice, more and more countries around the world. We've seen it in Turkey, we've seen it in Spain, we've seen it in Colombia, to name but a few. So I applied for my residency pre-COVID. Myself and my family lived there for some time because obviously we've been handling it for our clients and I wasn't satisfied with the whole process. For those that you don't know with Golden Visa, obviously it's a different beast right now because you have funds, but back in many years ago and for a very long time, a lot of it was around real estate. And around real estate, you've got 2 components which make it a little bit different to other countries in terms of citizenship and residency. You've got the legal aspect, right, which is preparing your documentation, making sure everything's fine. It includes opening a bank account in your name to transfer the funds in and so on. You've also got the real estate component, which is identifying the property and making sure that you get the right property through, checking its, doing a survey, for example, benchmarking against other options, investment, or maybe it wants to be a holiday home. But these two involve 2 different parties involved. And the problem we were facing is that when you've got these 2 different people, one of them gets paid because you'd have to pay the money up front if you want to get the golden visa, right? You can't have it in a payment plan. Even if you did have it in a payment plan, it wouldn't kick into effect until you reach the minimum investment threshold for the golden visa. So let's say it was 280, 350, 500. You need to get to that point. So if you're buying something at 1 million, let's say it was a low density area, which is 280. Let's say it's 1 million. You'd have to pay the 280 before, and then the rest no one really cares about as far as your application is concerned for residency. But once you pay that 280, if you were only doing it 280 or only doing it 350, which is what most people will be doing, they only really historically just do around the minimum required. That's been my personal experience, and that happens a lot. Once you've done that, whoever is your broker or intermediary or developer, they've got everything up front. There is very little incentive for them to really give you the maximum customer service. And so once they were satisfied, they were not really looking after you. And so you were stuck with the other party, which is obviously looking after your best interests. But anything that there's a problem here, they'd be like, well, don't talk to me about it. It's with the other guys. And they're already out of the picture. This is why myself and my family, my kids were too young to go to school, so they weren't missing any school at that age. And we went over. And then I went through the process myself of living there, renting there. We didn't like the property we had the first time, and that was because it was very difficult to get any good options, and we rushed into it, I would say. We didn't spend enough time on the ground. And then afterwards, we ended up going into another property, and then we realized the leases there and how they're done. But this video is not talking about property leasing. We're talking about investing and the mistake I made. So what happened is that afterwards we realized that we wanted to have a property we wanted to own. And I'll come to the real big mistake that I made in a minute, but let's go through some of the reasons. Now, we ended up investing in a property which was in Ajuda. So for those of you that don't know, you've basically got the Big Red Bridge, and then you've got Alcantara, and then you've got Belém, and then you've got Ajuda, and then you keep going further and further away from Lisbon. We liked that area. We found it was amazing. We were actually right next to the President's Palace. So when the Pope went there a couple of years ago, we saw everything. It was a fantastic experience. And it's a really, really nice area. The problem we had is that we went in and just said, you know what, this is a fantastic property. It was a good apartment, fantastic apartment. And we fell in love with it and we bought it. That's the big mistake. The big mistake is that the best deals I've ever made is that they were not emotional investments. They were just pure numbers. So I went into it and just said, you know what, this is great and we're going to use it ourselves and it's going to be a holiday home in the future. What happened afterwards is that I don't want to get the dates wrong, but generally speaking, I just get busy with life. And what happens is they changed the legislation because there was a lot of pushback at that time regarding the Airbnb. And what happened is that the area that we were in didn't make the cut. There was also the possibility that you could get the property itself approved for Airbnb, which is alojamento local, which is the AL that everyone talks about, to be able to say, you know what, we can rent this apartment out with the consent of everyone in the building. But the way that the building was and the type of building and the quality of the people in there and the owners, which was mainly owner driven, no one was really interested, meant there was going to be so much pushback, it was non-starter. That door closed. So the idea to have it as a holiday home and just have it rented out, we were not there, that door closed. Another thing that happened is that the golden visa regarding real estate also closed. So we could see not only all those people who bought golden visas in the past for real estate, also looking to offload their properties, which we always knew was a factor because all those people, when they get their passports or when they change their mind or they just want out or whatever, you'll have some of those people reselling, but it's a very small percentage of the market. But we also knew that now there wouldn't be that much demand anymore for golden visa because it closed and it went towards real estate, to funds, which couldn't have a real estate component. So that was a second thing that didn't work in our favor. The third thing that didn't go in our favor was not just those two, but it was also because they closed the NHR program. It's now the NHR 2.0, which is less attractive than the original one, which was very attractive at the time. And in the terms of pure numbers, that was driving a lot more real estate demand through real estate investing, but also renting, right? And both of those are a win if you're a property owner in Portugal. And that closed. So you've got three major changes which are changing without, before you even go into the psychological impact of such things changing. You've got three main drivers which are killing your exit plan. So those three things made me uncertain. Now, those three factors would impact everybody. What impacted me that made it separate is where you start to understand why I'm a little bit different when it comes to real estate investing. So what happened is that I had already a company in Portugal, and I still do today. But what I noticed is that if I was going to build a real estate portfolio there, which was the longer term plan, you could have a company and then that company, because obviously you've got high taxes in Portugal, you're talking 27 and above, depending on corporate and personal. If you had a company there, you could own those properties. And if you could build a credit profile with that, it makes a lot more sense in terms of offsetting your, for example, your costs and your management costs against any tax that you'd be paying. So the idea was to have a company and to have the company buy the property. So I bought the property through the company. Now, I could have done it in my personal name. That's fine. There would be nothing wrong with that. And probably in hindsight, I probably should have done that. But the thing is, if you buy it in your personal name, it's great because at the time interest rates were low and I could be able to, and that would be fine. But I would then have to pay the IMT, which as everyone knows is effectively your stamp duty, which is around 8%. So I didn't want to pay the 8%. And I knew if I could do it through the company, I wouldn't have to pay the IMT. And I would also be able to get exceptional tax benefits from doing it. I could have bought it in my personal name, and I bought many properties in personal name, but I'm now at a stage in my life where I've done a lot of that and I want to kind of try out new stuff and get really adventurous. So I bought it through a company and I didn't pay the IMT. So what I did is I had to, all it was just legal services to basically, the conveyancing and the market valuation, and that's it. So my overall cost involved to buy the property was negligible. So that's great. What happened is that by buying it through a company, you have to sell it within 3 years because it was a particular, I think it was rehabilitação, which is the term which is basically if you want to buy properties for the purpose of renovation or as a real estate flip business model. So we bought it through the company and we did it that way, but I had to sell it within 3 years. Then afterwards, when I saw these three main factors end, I thought, you know what, I've got 3 years now. It was about a year and a half by that stage. And I just said, I just think now I need to put it on the market because if I don't sell it in the next 18 months, I'm going to have to pay that 8%. Now, when you think of that 8% that you would have, plus the fact that to sell it, you'd have to pay 5% with the real estate brokerage in Portugal. 6% typically is what they charge for the international brokerages, right? Then you're looking at, plus you've got the VAT on top of that. So you're looking at 15%, the VAT on the brokerage fees, 15% in terms of acquisition and exit costs before you get about taxes on capital gains. That for me is a little bit hefty. And so I just looked at the 18 months and I said, you know what, I'm going to list it online. I had a very nice property, a desirable property in a prime location with a few things that very few other buildings had, which is why I did it. It had a heated pool. Most properties in Portugal don't have a heated pool. They have pools, they're just not heated, which I don't understand because it's not exactly the hottest country in the world. I think it's worth it. It also had a supermarket, which was fantastic downstairs, really attractive. But I had 18 months left. I said, I stick it on the market. I didn't get anyone even offering anyone with a reasonable offer for about 6 months. Another thing you need to know about investing in Portugal, weirdly enough, even though Lisbon is the capital city, it's still very seasonal. So you only really get demand around the summertime. So I put it on in November and then I realized, hold on a minute, I've got 6 months before I even got a genuine offer, and that offer came in May. By then I'm 2 years in, I got 1 year to go before I have to have this big bill of 8%. It came in at full asking price, right? Now, that's a good thing. And maybe I could have counter offered and maybe I could have get more. But right then, after 6 months without any decent offer and with all the things that were going on in the world around that time and the three key things that I saw, I was ready to negotiate. Why did they offer full asking price? Look, the property was already good. It wasn't the best in the world. But what had happened is I had managed to find a tenant who was willing to commit to a 3-year contract, right? Very attractive. Not everyone gets that, with a 5% net rental income relative to the purchase price that I made, which is also slightly above average. On top of that, it's inflation linked as well. You can also get that, it's index linked. And seeing as inflation was pretty high at the time, I would have been probably a little bit more than 5%. So I got a good property with a good yield. However, for me at that time, if I didn't sell it, I would have been looking at a big bill of 8%, plus of course the 6% plus VAT for the broker, 15%. In the end, I accepted it. I just looked at other opportunities I could be doing. Dubai, there were some good deals in at the time, and I was looking at other markets, and I accepted, and we did the deal. It was a smooth process. Everything was fine. But in the end, I only had to pay the broker fees. I tried to get them down to 5. They didn't want to budge. And to be honest with you, I was happy to get out. I managed to get out in less than the 12 months left. If I hadn't have done that, as I explained to you, I had a big bill to pay. But if I'd done it residential, I would have paid that 8% in the IMT. I would have had to sell at 5% plus VAT. 15% if you include in, maybe if you bought in your personal name, you probably get mortgage, 1%, banking, mortgage arrangement fee. 15% entry and acquisition is extremely high, right? If you think about that, even if you did get 5% net, lease agreement on your contract, basically it's 3 years before you even break even on that, right? Even if you were renting for 3 years, you're back where you started, you're at year 0. And I just didn't want to be there when that bill came, and I got out, and I was happy for the experience. I had a great experience. But the moral of the story is Europe, taxes are killing you, right? The acquisition cost, the exit cost, the broker fees is a market thing. That's not really there. But 8% is quite a lot paid to the government. And then you've got your capital gains tax. Then you've got your rental income tax. And then you've got all the other stuff. And that, when I sold Portugal, was not the only property I sold in Europe. I sold my property in Poland and I sold my property in Greece, I think about a year before. I'm out of Europe. I don't see any reason to invest in Europe. There are other countries where we get much better return on your investment. You know, when you look at it right now, I looked at a property in France. I thought this would be quite good. You know, there's some tax plays that are quite interesting in property ownership in France. But when I saw the list of documents that was required to fill in, I'm sorry, and I feel bad about saying this, but Europe, you know, needs to get its act together. You're not attracting investment. Before you even talk about companies and moving there and, you know, starting a business, just on properties alone, your KYC, your AML documentation, the list of documents, your affordability criteria, right? Even someone who's got a strong profile in terms of collateral, in terms of affordability on their repayments, there's just other places that you can do better deals with a stronger growth, higher rental income, lower taxes, and lower associated headache and admin and all the other stuff that comes with it. My biggest mistake though was I loved that apartment. I still love Portugal. We still go in there. We still have other investments there, but I just got out of it. And a lot of it was because I used my heart and not my head. And that is one of the main lessons I could ever give to anybody from my real estate experience, which has been over 2 decades of real estate experience, 30 properties. I've done commercial, residential, flips, arbitrage, you name it, I've probably done it. So that was my Portugal property mistake. I hope that you learned from it so that you don't make that mistake. You know, we're here to support you with anything you want to do. We're getting clients coming to us and just saying, listen, I just want to get a consultation service from you. I want to be able to get some kind of mentorship. I wasn't expecting that. I'm happy to do it. I know a lot of people, I'm known for other things, the citizenship and the residency and the business side of things, and obviously the UAE and so on my network. But I have always been in real estate for many years and I feel like I can add a lot of value. We're here to support you through me and my team. I mean, we have access to an in-house legal department, real estate department, analyst department. And I think that's more than maybe your average person has. And I'm happy to share that network and give you some of that leverage. But ultimately, we're here to support you. I hope that you enjoyed this video. If you like anything else, millionairemigrant.com, let us know. And if you like the video and you want us to do more of that video, let us know. I'll read the comments and maybe I'll do some more. Thank you.